Welcome to Bloomberg Markets. I'm Scarlett Fu. The U.S. housing market slowing down a touch in the month of August. We're looking at new data as we enter an interest rate cutting cycle that buyers have been waiting for. First, though, let's get a quick check on financial markets. A bit of meandering in equities here, especially after the S&P 500 yesterday closed at a record high for the 41st time this year, currently down a hair by about 3.5 points at 57.29. However, we are seeing tech stocks like Nvidia and Meta gaining, and that's helping lift the Nasdaq 100 by 0.2%. Gold is holding firm near a record high, still seeing some momentum, of course, after the Fed's half-point cut last week, and Treasuries are down across the curve. The 10-year yield is now approaching the 3.78%. It's come down a little bit here, 3.76% right now at the moment. All right, let's dig into some individual company stories with midday movers in equities, and Bloomberg's Abigail Doolittle has that covered for us. Abigail?
Well, Scarlett, stocks on top may not be moving all that much, but beneath the surface, we have quite a bit of movement, starting off with the shares of Hewlett-Packard Enterprise, HP Enterprise, up 4.9%. Barclays has upgraded shares to an overweight from an equal weight. The analysts there saying that there's could be an overall recovery in enterprise servers, and HPE really stands to benefit from that trend, especially since there's no quote-unquote AI premium in the stock. In addition, storage could improve for them, and the analyst at Barclays also believes that the deal with Jupiter could be accretive. Now, we have lots of other AI stocks higher, too, perhaps a tailwind from that. Plus, there's a report that the CEO of NVIDIA is done selling shares, maybe removing a bit of an overhang on stock. Intel and Micron, on that stock, I should say. Intel and Micron higher as well. And on Intel, folks continue to wonder whether or not the company could be bought out, or if the company will accept up to $5 billion from Apollo to help with their turnaround. Turning to the online gambling space, we're going to see some very nice gains here. Actually, these are the declines of the automakers. Ford down 4.1%, General Motors down even more, and Rivian down the most. GM, though, receiving the biggest downgrade. This is an overall downgrade of the space from Adam Jonas and Axe on the car space. On the U.S. automakers, GM cut to an underweight. Lots of nuances to this call, but overall, Adam Jonas saying there's lots of headwinds facing the car makers, including rising inventories, concerns around the consumer and credit, not to mention how do we bring AI into the picture. So lots of weakness here. At the lows, GM down close to 7%. At that point, it had been on pace for the worst day since 2022. And now I believe we're going to take a look at these online gamblers, and we're going to see that Flutter Entertainment, the parent to Fanduel, up 7.3%, a really nice gain. They announced a $5 billion buyback. They also are saying that the overall U.S. betting market by 2030 should be $63 billion. That's 50% better than what had been expected. And, well, DraftKings going along with the ride.
All right, great stuff. Abigail, thank you so much, and for giving us a preview into what we can talk about when it comes to Flutter and Fanduel a little bit later in the program. Meantime, let's go back to our top story, which is data on U.S. housing front and center today. Mortgage rates posting an 8th straight week of declines, while sales of new homes pulled back in August following a pretty sharp increase in the prior month. Apparently, buyers remain patient, even as those mortgage rates have steadily declined. Earlier on Bloomberg, Danielle Hale, who is chief economist at Realtor.com, spoke about this current housing situation.
With affordability as stretched as it is in the housing market, there's less room for prices to run. That said, everyone, I think, has been surprised at how resilient prices have been in the face of higher mortgage rates. So buyers have been willing to stretch affordability as opposed to necessarily waiting for home prices to fall. And the big picture inventory shortage that we see is a big explanation for that. So if we look over the last decade, we are several million homes short of the number of households that have been added. And when you have that kind of scarcity in the market, it's hard to see prices really relax or decline in any meaningful sort of way.
Let's get another perspective on housing and bring in the chief economist at Zillow, Skylar Olsen. Skylar, thank you so much for taking the time to speak with us. I mentioned how mortgage rates have fallen for 8 straight weeks, tracking a move lower, of course, in the 10-year yield in anticipation that the Federal Reserve would cut rates, and that did finally happen last week. Now that the central bank is on a rate-cutting campaign, how does that shore up home buyers' confidence?
Well, I think one of the things that we're watching buyers is kind of catching up to the idea that mortgage rates are lower and that the break that we've recently gotten in mortgage rates might even be a lot of what we're expecting to get. In other words, mortgage rates aren't expected to go too much lower from here because mortgage rates move early with that anticipation. So in other words, what we've been watching is buyer activity, I would say still did readily, has been returning with those lower rates, but it's been met more readily by new listings from existing owners. And that's kept the competition. Prices have been real soft, though not falling. More recently, we have seen, I think, more encouraging evidence of that buyer responding to those lower rates because after all, rates continued to fall in or through September, now being around the low, 6.1 if you're looking at the Freddie Mac PMMS. That's $200 less a month on the typical U.S. home. There you're thinking ballpark $360 or $1,000 price point on that kind of home. Now that mortgage payment is $1,750. That's $200 less since the top of May and almost $100 down from the top of August. If you take us or if we go to much more expensive markets, say on the coast, that would be an even bigger break. That's a pretty big deal for the buyer right now.
Okay, you were talking about the 30-year fixed rate mortgage, of course, and we know that while mortgage rates are pretty elevated, there was some switching by people to, say, a 15-year mortgage or even an adjustable rate mortgage in the hopes that eventually it would come down. What does demand for those other kinds of mortgages look like right now?
Oh, that's a really interesting question. We haven't done a recent at Zillow Economics a breakdown of those products, though you did show that graph earlier, and we have noticed another upswing in, say, cash out refis. Generally, what we've been noticing with people strategizing around their mortgage product, it often depends quite a lot on who that buyer is. For example, a 15-year loan definitely gets your mortgage rate down, so that's a better investment potential on your home because the cost of leverage is much lower, but that dramatically increases your mortgage payment. So is not really an option for a lot of households. So these different strategies that people can apply most certainly do change as those prices would change. So I would anticipate, for example, the incentive to get an adjustable rate mortgage, which is kind of like getting your cash out refi ahead of time, right? Or the 15-year fix, these incentives would drop. The upswing in cash out refis, I mean, that mortgage rate break is a big deal for any of the people, the enough buyers that did move forward when mortgage rates are high. This is their opportunity. And you'd actually probably be surprised how many people didn't refi when the opportunity was there before. So we do see that activity moving forward. There just was so much pent up demand really in the house market because of that upswing. And now we've gotten that break. I think the September numbers will be very interesting to watch.
Okay, great. You answered my next question, which is we're obviously not seeing this reflected in the data yet because the data is backwards looking. There's been a lot of pent up demand, as you said, and buyers have been patiently waiting for these mortgage rates to come down. I'm curious as to how sellers have been preparing for this moment now that we are finally in a rate cutting cycle.
Yeah, Zillow Economics watches the seller activity so closely because we are in such an inventory-starved market. In July, we saw 26% fewer homes during July than we would normally have seen in a housing market pre-pandemic for that season. August was actually better, right? Because of that rate break, probably unlocked a few of those pent up sellers who were kind of major life events, put them wanting to sell, but the rate break moved it into more of an opportunity, or at least less costly, right, to give up that low rate that they had locked onto. So in August, we're now only down 21%, but that really is a dramatic improvement for a market that is so very starved. We did see, as much as we haven't quite seen that really strong response of the buyer, I will say Zillow data did show in our inventory numbers, inventory didn't increase as quickly over August. So things are still soft. What I would say that how you could interpret that, right, is we've got this affordability break from lower mortgage rates. Housing markets are not quite yet, speeding up or hotter, competitive yet. The buyer, not quite rushing in. I think this is the sweet spot for those sideline buyers, those that are actively shopping in the latter part of the home shopping season. And we might end up seeing this home shopping season kind of extend out more than we might otherwise have expected.
Yeah, clearly the usual dynamics of the housing market may no longer apply. I mean, the spring selling season, that kind of went away with the pandemic. Skylar, really appreciate your joining us today. Skylar Olsen is Chief Economist over at Zillow. We've got a lot more coming up on Bloomberg Markets, because coming up, sports gambling trends in the U.S. are leading Fanduel's parent company to project a $63 billion market once it matures. We'll have more on that. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. U.S. sports betting is paying off for FanDuel parent company Flutter. That stock climbing to a record high after Flutter announced plans to buy back up to $5 billion of its own shares and outlined a new long-term growth plan. Competitor DraftKings also climbing higher today. For more on Flutter's outlook, let's bring in Bloomberg's Chris Palmeri in Los Angeles. So, Chris, what is the catalyst here for Flutter's new outlook and this share buyback plan? Because its second quarter results came out about 6 weeks ago, and it's not due to report third quarter results until about mid-November.
Right. Well, they're hosting a Investor Day presentation, which actually just started and is going to last about 4 hours. This is significant time-wise because we're about a month into football season, and I spoke with Peter Jackson, his CEO, this week, and he was, for him, giddy. I mean, he's very happy. They now have this giant projection going out to 2030 in terms of the size of the market, basically a 50% increase in what they estimate the U.S. market will be from their prior estimates, and gave out 2027 forecasts for sales and profits for the company, and all of those are looking pretty strong, and that's why you see the stock market reaction.
Yeah, and I'm looking at its businesses, and what's interesting here, of course, is Flutter is based in Dublin, and the U.S. makes up about just over a third of its overall revenue. The U.K., and here we're talking about, of course, Ireland as well, making up about 26%. Can you tell us a little bit more about Flutter's business that makes it distinct from a company like DraftKings?
Well, it was a company that began as Paddy Power in Ireland. It was sort of your classic, sports betting, in retail locations there. And it's just grown dramatically over the years, big expansion in online betting in Europe. They acquired FanDuel a few years ago, just as the U.S. market was opening up to sports betting. And they've just nailed it. They've been the number one sports betting provider. DraftKings gets a lot of attention, but FanDuel has really been the leader for quite a while, kind of the first to introduce these parlay bets and that in the U.S. that other people are not copying. And they've also been growing internationally. In fact, just this month made 2 big acquisitions, one in Italy and an investment in one in Brazil. And so, they have grand plans to be the leader in sports betting and online betting worldwide.
What did Peter Jackson say about further acquisitions? Because I know you've been tracking a lot of the deal making that he's been doing, and he's been growing the company pretty steadily.
Right. So the strategy is he said, been one to make acquisitions. In fact, FanDuel was one, a company they bought. He looks for companies where they can have a leading market share. In Brazil, he said that he partnered with what he thinks is the best online operator, or that they partnered with him. And in Italy as well, bought one of the leading players, a $2 billion plus deal. So he's not afraid to spend money and establish that leading position, and then bring all the technology that they've had really based on years of working in Europe and offering these products.
Okay, and just very quickly here, I mentioned DraftKings also rising on, I guess, in sympathy on this news. Did DraftKings say anything in terms of, long-term projections about the growth and the potential of the U.S. Sports betting market?
No, when they reported a while ago, their CEO was upbeat too. But I think the stock market reaction today is just the fact that Fanduel or Flutter sees the market growing so dramatically, and DraftKings is riding that.
Got it. All right, Chris Palmeri, thank you so much. Bloomberg's Chris Palmeri reporting for us from Los Angeles. And of course, sports is top front and center for all these different entertainment companies as well, including Netflix. And of course, we want to stay with Netflix because its co-CEO Ted Sarandos, who is responsible for so much of its original programming, recently sat down with David Rubenstein to discuss the company's evolution. In particular, the two of them discussed Disney's late entry into streaming. Take a listen to how it all shakes out.
Always worried about that. We couldn't believe it took so long for him to catch up to it. In fact, as one of the motivators to make our own content was, I was pretty sure that if we were right, that all of these people who were supplying us their old shows would never sell to us.
And to watch more of David Rubenstein's interview with Ted Sarandos, be sure to tune into the David Rubenstein Show, Peer-to-Peer Conversations. That is tonight at 9 p.m. New York time on Bloomberg Television. Now coming up, America might be past peak college. So some institutions, they're opening an M&A playbook, hoping to win amid this downtrend. We'll have more on that, particularly when it comes to Northeastern. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. American higher education is in crisis. According to Fitch Ratings, 20 to 25 private nonprofit four-year colleges will close annually over the next few years. Now, that is roughly double the yearly average over the last decade. And that's led some schools, like Northeastern in Boston, to follow a mergers and acquisitions playbook to grow amid this collapse. For more on this, we're joined by Bloomberg's Francesca Maglione, who co-wrote this story, and it is our big take today. Francesca, clearly when it comes to higher education, the strong are getting stronger, the weak are getting weaker. Elite schools like the Ivy League schools are in a category of their own, but we talked about all these smaller schools struggling and many others struggling to stay afloat, to service their debt. Talk a little bit about how Northeastern is capitalizing on this.
Yeah, so Northeastern is kind of paving a third way within this higher education landscape. Since 2019, they've been acquiring and merging with smaller colleges that are struggling kind of as a way to keep them alive. In 2019, they acquired a college in London. In 2022, they did one in Oakland, and they're kind of seizing on this moment when many schools need some sort of savior or they'll close, and Northeastern is in a very unique position to continue to grow at a time when all these other schools are dying. Yeah.
How has this changed the school as a whole? Because once upon a time, it had a reputation as a commuter school. And in the last, I would say, decade, its prestige has really grown, and its rankings in things like the U.S. News and World Report have gone higher and higher, and its acceptance rate has gone down.
Yeah, for sure. Northeastern used to be known as a school that only local students applied to. In 2006, they got 20,000 applications. Last year, they got almost 100,000 applications. So they've really grown that brand recognition. A way that they've done this is that so far they have 14 campuses all over the world. And so they're literally getting in the face of everyone that needs to go to college or wants to go to college by doing so. And that's kind of the strategy that they've taken at a time when schools are competing for students. They are literally going to where the students are to keep increasing their numbers.
Okay, yeah, and to that point, the president of Northeastern actually said to you that if you don't have the brand and the differentiation, you are going to be obsolete. So they're kind of jumping on these schools that would be obsolete and taking advantage of that. Have they been successful? I mean, having all these campuses around the world in an awfully short amount of time means that there's a lot of confusion, I would guess, from students at some of the schools that have been taken over, along with Northeastern students who thought they were going to Boston.
Yeah, for sure. There's been definitely some clash when they've merged with these schools. At Mills, some students protested. It's just very confusing to go to one school and then all of a sudden you go to a different one. There's also been some hesitancy from schools that are struggling that don't really warm up to the idea of a merger or an acquisition. Those are not terms that are thrown around in the world of higher education. So that's for sure a struggle that they've had, but they have been really successful, and other schools are looking at their model. Northeastern told us that they've heard from nearly 50 schools that are interested in either merging with them or working with them or learning from them and how they're taking on this different model.
So they're fielding offers from schools themselves to say, hey, come take a look at us, come buy us.
or we can buy you, I guess, is there.
Interesting. Yeah. Okay, how is this, I go back to that question of how is this changing the school? Because Northeastern is also known for offering students internships and co-ops, and that's a great value proposition now in a day where tuition costs $90,000 a year, and students and their families want to make sure that they can get a job after graduation.
Yeah, so Northeastern is definitely pushing kind of the model of what students think of a traditional higher education. They're not tailoring to students who want to spend 4 years in a small campus with a small group of people. They're tailoring to students who want, to be more practical about their education. They want to think about their career before they even graduate, and that's really appealing when college costs $90,000. People want to see a tangible end goal or a tangible result once they graduate.
The other thing that we need to point out, and this is a chart that you included in your story, is that we have this demographic cliff coming up. There's going to be a lot fewer students applying to schools, at least in the U.S., which kind of reflects the falling birth rate during the great financial crisis. If you were to look at a chart, it kind of just goes off a cliff a little bit here. Northeastern has a strategy where it really tries to not cater to, but appeal to international students as well.
Right.
Talk a little bit about how that fits in.
Yeah, so Northeastern last application cycle saw almost 20% of their applicants were international students. This is really convenient for schools because international students usually pay full tuition, and that's how a lot of schools make money, and that's something that these smaller schools that are closing are really struggling with, to keep those enrollment numbers up and to keep people that pay full tuition.
Right. And what did the students at Northeastern say? They've gone through a lot of change recently. So.
Yeah, we spoke to a student at Northeastern that compared it to Disneyland. She said it felt like you're walking shoulder to shoulder, making lines to go into the library or not being able to find a spot. But she was super grateful to be there, and she called it the it girls of schools. But it definitely, students are feeling the crunch in Boston.
All right, great stuff. Francesca Maglione, thank you so much for today's big take on Northeastern University. Coming up, we're going to take a look at what's going on in China because the central bank is out with a new policy to breathe some life into its struggling economy. What does this mean for Chinese markets and the economy in the long term? This is Bloomberg. Welcome to Bloomberg Markets. I'm Scarlett Fu. We have a stock market that is still sitting near record highs, with the S&P 500 giving up a little bit of ground here after 2 days of gains. It had logged its 41st record high yesterday, but right now just lower by 0.1%. Tech stocks doing a little bit better here. That's helping lift the Nasdaq 100 by 0.1%. Gold also holding near a record high, currently at $26.54 an ounce. And we should mention that there is selling in treasuries across the curve. That is pushing up the yield on the 10-year to almost 3.77%, currently at 3.7678. Let's go back now to equities here, because even though the big number is pretty much unchanged, Abigail Doolittle has been looking beneath the surface for some individual movers. Abigail, what do you have?
This is an interesting story. It's Alphabet and Microsoft. The stocks may not be moving all that much, but there's been a little bit of a fight between Alphabet and Microsoft relative to the cloud. More Alphabet fighting Microsoft. Today, Alphabet ramped up that battle, filing a formal complaint against Microsoft with the EU antitrust body, essentially saying that Microsoft's Azure, that the cloud services, it restricts customers from accessing rival platforms, including Alphabet's, Google's cloud platform, Amazon Web Services. Plus, they're saying that their conduct amounts to an abuse of dominance under EU law. In addition, the cloud sector, they're trying to dominate the cloud sector, according to Alphabet, exposes European Union citizens to security risks and IT failure. So again, the stock's not moving all that much, but the story itself is pretty interesting, one I'm sure that we'll be paying attention to for quite some while. Then KB Homes, well, this is a big mover. Shares down nearly 5% at the lows, the worst day since, actually now down more than 5%. So it may again be the worst day since January. It's either January or April. Either way, it is a big loss. This after the company, the home building company, missed the earnings estimates. Also, the margin was weak. Citi saying that this confirmed their sense that margins could be hurt for home builders. Some of this, of course, Scarlett, could have to do with incentivizing customers to buy homes along with buying down mortgages. This data, interestingly enough, is very consistent with the weaker August number for home builders, new homes overall. So it's interesting to see KB Homes, despite the fact that we have this Fed cut finally coming into play, not soon enough, as some customers apparently held off waiting.
Yeah, absolutely. And I just checked. You're right. It's the biggest one-day move since January. Abigail Doolittle, thank you so much. We want to take a step back here and look at the macroeconomy, because in today's second big tape, we're taking a look at how China is doubling down on its stimulus. The People's Bank of China has cut the interest rate on one-year loans by the most on record to 2% from 2.3%. And this follows a wide-ranging stimulus package that was announced the day before. Here's a reaction to the news from guests across Bloomberg.
Chinese markets have gone through a long period of underperformance, almost to a stage where people just don't want to be there. And I think what these moves are saying is that probably we've reached the end of that underperformance.
I think the things that we would need to see to fundamentally alter the trajectory are, the ingredients to this would include reforms that ultimately push the savings rate down and drive structurally higher demand from the household sector.
I think they need to take more decisive measures and significantly larger scale funding to help stabilize the property market.
It signals a change of the policy stance. It went from a highly reluctant stance to stimulate the economy or showing such a high degree of tolerance for slower growth over the last 2 years towards one that's much more proactive.
How effective it is, it probably would take some time to see. But then versus some of the stimulus kind of policy that they have announced so far, it's been a more better coordinated one.
Enda Curran, covers the Asia and global economy, and he joins us now from Washington. Enda, let's just take a step back here for a moment, because in this package announced over 2 days, there are a blitz of measures to stimulate the economy. Walk us through what it involves exactly.
Yeah, so two ways to look at this. I guess on the one side, Scarlett, the authorities have announced a series of measures, mostly interest rate cuts, making it cheaper to get a mortgage. They're offering capital to inject into banks. They're making it easier for stock investors to get cheap liquidity. There are other measures then around injecting cash directly to impoverished households. So there's a sweep of measures there. And then there are the optics of how this came about. It was a news conference, which is obviously unusual in Beijing. It was the top economic officials. You had a PBOC governor making the announcement. And that speaks to the idea that the Chinese authorities are now serious and maybe getting urgent about tackling the slowdown in the economy. So, taken together, it's a big announcement by China. It's obviously important degree of support for the economy. But of course, plenty of analysts have been quick to say that, yes, it's support, but probably not enough to turn around the broader story, the broader slowdown in China's economy.
Yeah, that's exactly it, right? I mean, we heard that from our guests earlier, too. What exactly does success for these measures look like? The Chinese stock market did rally, extending gains to a third day. But then you look at FXI, which is the ETF that tracks Chinese big cap stocks. And in U.S. trading, it's currently down. Investors don't seem all that impressed, and they keep talking about things like more decisive measures. What part of the economy do they want to see targeted here?
Well, I think so. For some time now, the central bank has actually been lowering interest rates where it can and trying to stoke mortgage lending where it can. It's just the scale of the moves that caught people's attention really the other day. But the bigger picture is the government needs to go out and borrow and spend more money. It needs to inject money into the economy if it really wants to turn things around, and that's both at the regional and central government level. The actual budget for this year, they're behind their projected spending. That's because of complications at the local government level and getting this money out the door and spending it. So a lot of economists are saying that's where the trick will be to turning around China's economy. Some are expecting that the next leg of this will be fiscal spending, that the next announcement will be fiscal spending. But it's worth remembering the context in all of this. The stimulus announced this week, and even if what might be expected to be announced, is nothing on the scale that we saw back, say, in the financial crisis, and then back say, in previous times like that 2015-16 era when the world became accustomed to this idea that China can turn on its spigots and turn things around. This time it's much more piecemeal, it's much more disciplined, and the authorities clearly are taking their time about how they want to go about this.
Yes, but nonetheless, there is some urgency here in terms of what they're doing. And timing-wise, I wonder how much of it is tied to things like the Federal Reserve beginning its rate-cutting cycle, as well as the upcoming National Day holiday in China on October 1st.
Yeah, I mean, they would want people to be in good form, They would want people to be out and about spending. It's obviously a critical holiday period. The Fed going by 50 basis points would have given them a window too, of course. That takes pressure off the yuan. They're probably also trying to get moving maybe this side of the US election. They don't know what complications are going to come on the other side of that vote. But most importantly, though, really it's the economy has been crying out for support for some time now. It's been stuck in deflation. All of the indicators have been, if not subpar, have been disappointing at best. The manufacturing sector in the doldrums, the housing sector, as we all know, still remains going through the wrenching sort of correction that it is. So it's not really a surprise that the authorities have come to the table eventually. I think it's just more about they're trying to signal now a degree of urgency and that they've got this.
All right, good stuff. Enda Curran joining us from Washington. Thank you so much. Bloomberg's Enda Curran covering the Asia economy. Now, China is also at the center of many conversations at this week's Earthshot Prize Innovation Summit. Here's what the European Commissioner for Climate Action told Bloomberg's Francine Lacqua.
We do face a China problem in terms of the non-level playing field we are facing in the European Union. And it cannot be that our companies go bust because the marketplace is flooded with state-subsidized products. That in the end will kill European industry, and we will not allow that.
So do you see, when you say you won't allow it, is it going to be similar policies against China to what we've seen in the last 5 years, or could we even see that being ramped up?
Look, I'm one of the people who firmly believes that competition in essence is a good thing, but it should be fair competition. Fair competition at the European marketplace.
What's your take on financing? So if you want to also have something at the EU, again, how do you make sure that China pays its way if you're antagonistic towards it?
Well, this is something for all of us. And it's a fair question for the European Union to continue to play a leading role and to continue to pay its fair share, or actually more than its fair share. Now the world pays roughly 100 billion each year, and Europe does something between a quarter and a third of that, which is way more than our fair share. But others do need to step in. And if you're able, like China, to go to the moon on a mission, then you're also able to pay more in the domain of climate action.
And that was the European Commissioner for Climate Action speaking with our own Francine Lacqua. Coming up on Bloomberg Markets, earnings season here in the U.S. never ends. Micron is on deck. It'll be reporting earnings after the closing bell today. We'll take a look at what investors want to hear. And of course, it's linked to AI. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour, and we're looking at Micron Technology today. The chipmaker will report earnings after the closing bell. For more on what we can expect, let's bring in Melissa Otto. Melissa is head of TMT research at Visible Alpha. And Melissa, Micron is known as a memory chip maker, but like so many other companies in the semiconductor space, it has become an AI play. Can you briefly explain how Micron's processors are used in AI technology, where it fits in the supply chain?
Thanks, Scarlett. Indeed, this should be a very interesting quarter for Micron. It's really all about high bandwidth memory. This is a memory that supports AI-driven servers or sensors, and essentially this is what is advancing a lot of the AI infrastructure at the moment. And this is, I think, an area where Micron is really seeing quite a bit of demand and strength in their business.
And I look at the analyst estimates for what it's expected to report. Fiscal fourth quarter, that is the 3 months that end in August, it's expected to post a 91% jump in quarterly revenue. But then you look ahead to fiscal 2025, and the growth rate starts to slow down. 76% growth in the fiscal first quarter, then 52% in the fiscal second quarter. Are we at the high water mark here for Micron?
Yeah, last quarter, the company delivered in-line earnings, but they saw a ramp up in CapEx, and the market didn't really like that. We saw the stock sell off a bit. So coming into this quarter, what we've seen in terms of revenue expectations for both DRAM and NAND, and the high bandwidth memory falls within the DRAM segment, which is where we're seeing the most dramatic growth. We really haven't seen revenues ticking up that much since last quarter, but what is really interesting is that the DRAM gross profit expectations have been moving. They moved from 1.7 billion to 2 billion based on Visible Alpha consensus. And I think what's going to be really critical this quarter is the outlook and what the company guides to and how they provide color around next fiscal year. Currently, based on Visible Alpha consensus, we're expecting the DRAM segment to deliver over 50% revenue growth, but for the gross profit to go from 4.4 billion to over 12 billion, so nearly tripling year over year.
Okay, so when we get the results this afternoon, you'll want to be looking at the DRAM part of the business because that's what houses the high bandwidth memory.
Right.
I look at how the market has received earnings from two big AI chip related companies, NVIDIA and Broadcom, and the reaction has been fairly mixed. And to some extent, that kind of reflects how sentiment towards these AI plays and this AI narrative has really stalled quite a bit. How high or low do you think expectations are? How high or low is the bar heading into this set of results from Micron following what we heard from Broadcom and NVIDIA?
Yeah, it'll be really interesting. I think the goal here will be for them to at least meet or exceed expectations and to provide an outlook that exceeds where the current market is in terms of consensus. So, I think what I've been seeing in the space is companies that don't do that have, really not seen much movement in their stocks or may even see some downward pressure in the stock price.
How specific do you expect Micron to get when they give an outlook? Because that's been one of the other knocks against a lot of these companies is that they'll be optimistic, but generally optimistic as opposed to really pinpoint precision optimistic.
Yeah, I don't know. It's hard to call that. I'll be keenly listening on the call to hear specifically, what they say about next quarter, what they're expecting for the full fiscal year, where demand is. So one of the big questions is the demand continuing to outstrip supply? That's what they said last quarter. Or are we seeing that moderate? That's, I think, one of the critical dimensions to what's driving that gross margin, that gross profit expansion year over year, and that assumption that's been built into the market.
All right, so it sounds like we're going to be watching for and listening for specifically any commentary on the gross profit of the DRAM business, which includes the high bandwidth memory business. Thank you so much. Melissa Otto, as always, head of TMT research at Visible Alpha. Coming up on Bloomberg Markets, the Asian American Business Development Awards honors 50 business leaders every year, and one of the award recipients will be joining us next. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. This month, the Asian American Business Development Corporation held its annual 50 Outstanding Asian Americans in Business event. And among the honorees was Amy Chou. Amy is the Chief Operating Officer at Addition Wealth. And I'm pleased to say she joins us now in studio. Amy, congratulations, first of all.
Thank you.
I want to get a little bit about your history, because that obviously helps build out our understanding of what it is you're being honored for. And you started off in finance on the trading floor at JP Morgan. What was your product?
I was on a sales desk on a fixed income trading product.
And how did that lead you to the realization that finance was more of a stopover rather than your ultimate destination in what you wanted to do?
I love that question. So financial services, I'll say, is very interesting. I'm in fintech today. Our company is in financial services. But what I'll say is what I spent my time thinking about at JP Morgan was really the macroeconomic environment, not necessarily building a product for everyday people. And so after my time at JP Morgan, I actually moved into consumer technology, where I was building different products to make things that were previously inaccessible more accessible to the masses. Before we started Addition Wealth, I was at Uber, where we were helping to make rides as easy as booking right on an app and then waiting outside for your car to arrive. And that's where I found my true passions as an operator.
As an operator, but without the technology background necessarily, how do you bridge that knowledge gap?
It's a really great question. So I think a lot of it comes down to putting in the work. really understanding users and spending a lot of time understanding the pain points that users face. I think when I made my first transition over to Jet.com, which was an early online e-commerce player, I spent a lot of time really understanding, so what are the key data points that we want to look at to build this product, and spent a lot of hours just grappling with the numbers, using a lot of the experience from JP Morgan to understand how data can tell you what users may want to see in a digital product. And we use a lot of that today at Addition Wealth as well. So we're a financial wellness company where we look at what are the key areas that people are struggling with in their financial lives, and how can we use and bring financial expertise to those individuals to help them solve their problems.
And now you're also able to bring in the macroeconomic part of the equation too, which is what you focused on early on at JP Morgan.
Exactly.
What's the biggest difference between building out a financial services company, a fintech company, versus a consumer product company?
I would say it's very, very different. So I think, number one, when you're building a consumer-facing product, you actually have a little bit more latitude to make mistakes, right? You can roll back features, you can roll back code. I think in financial services, when people are making real financial decisions every day based on our platform, we need to be really careful and make sure that what we're shipping is almost 100% of the way there, right?
Yeah.
We can't afford to make mistakes because that has impact on people's lives, on people's personal finances. And so we spend a lot of time at Addition making sure that our processes are robust so we can make sure that we're very confident in all the products that we ship for individuals.
So Addition Wealth helps individuals with their finances, manage their finances, understand their finances. How is AI involved, if at all? I mean, how much do you want to inject into what you offer?
Yes, I love this question because AI has so much room to positively impact technology and all of our lives. The way that we think about AI at Addition Wealth is how can we first ingest and leverage AI to make all of our processes, things that were previously manual or very time intensive, faster. We don't use AI today to deliver automated advice to people. We still believe that there's something special about the human touch when it comes to financial advice, but we use AI to power all of our processes and systems, including how we build and ship product, all the way through to how the financial advisors on our platform can deliver advice and guidance to individuals.
Okay, so it kind of makes things more efficient, but it's not replacing that human touch. You're a woman of color, obviously, and as COO at Addition Wealth, you are calling the shots here. What's the most unexpected part of that evolution into being someone who is calling the shots, yet is in many ways a double minority, a woman and a person of color?
I love this question. So something that I think something that I've seen throughout my career is that you always have to put in the work and also be your own best advocate. I think I've been very fortunate to always work with really strong mentors, managers, and leaders that have appreciated having a diverse set of voices at the table, at the decision-making table especially. And so at Addition Wealth, we're really proud to have a leadership team that is majority women. I think that's very rare in both financial services and also in technology companies. And so it's something that we're really proud of. And I would say throughout my career, calling the shots wasn't natural. I think naturally, I was like, I'll do my work and hopefully get recognized for doing that work and putting my head down. And I realized at some point, through a lot of pushing and advocacy from managers and leaders that I've worked with, that you really need to share your ideas, and that a diverse set of ideas from a diverse group often results in better product and better companies.
Amy, really appreciate your joining us today and really liked hearing about your story and your journey here.
Likewise, thank you for having me.
Amy Chou is Chief Operating Officer at Addition Wealth, which helps individuals with their finances. She is one of the honorees at the Asian American Business Development Corporation's annual 50 Outstanding Asian Americans in Business. I'm Scarlett Fu. That does it for Bloomberg Markets. As we head to commercial break, just a quick look at where markets stand right now. You have the S&P, Dow, and the Russell 2000 all in negative territory, although the NASDAQ still clinging on to a gain, just 0.1% there. Treasuries also declining, pushing the yield up on the 10-year to 3.77%. Even gold declining a little bit, backing off of its record high. This is Bloomberg.